Boy, do I got something good for y'all. What's going on? Zach from iTrendz here. Today we are going to be talking about these EMAs, and I'm not going to be one of those YouTubers that doesn't tell you until the end. It's the 9 and 21 EMA. We use these every single day, day in, day out, to let us know where the trend's going, if the momentum is slowing down, and when to take our profit. So that's what we're going to be talking about today. Hopefully you guys enjoy this video, get a lot of information out of this video. Hopefully it's very valuable to you guys. If you guys do have anything that you guys want to see out of us, please drop it in the comments below. Of course, a subscription is really, really helpful for us. We are a small channel, only 200 subs, and a like, of course, is very, very appreciated. Anyway, I'm going to take you guys into my computer. Let's get right into it. So let me unhide some things and we're going to break it down. We're going to go from left to right. Like, ignore all of this right here on the screen right now. And we're just going to focus on this over here on the left. So what I want to talk about is the 9 and the 21 EMA and what they actually mean. So the 9 EMA is an EMA, or an exponential moving average, over a period of 9 days, right? And that's the length. And then the 21 is an EMA, an exponential moving average, over the period of 21 days. So it's, if you can't figure it out already, the 9 EMA is shorter than the 21 EMA, or in other words, the 21 is longer because it's 9 days versus 21 days. Which one's longer? So the longer you have on an EMA, the smoother that line is going to be. An EMA is essentially just price smoothed out over a period of time. So if you have longer duration, so instead of 21, say we had 200, that line is going to be much more smooth and much more elastic in a way than the 21, because it's counting 200 days worth of data rather than just 21 days of worth of data. So it's going to be a lot less volatile. So we're predominantly going to be using this on the 5-minute chart. Feel free to experiment on the larger charts, 15-minute and 1 hour, but this is predominantly going to be used on the 5-minute chart. So I'm going to actually just say predominantly used on 5-minute chart. Make sure that I put that in there so you guys can write that down as well. So we use this on the 5-minute chart when we are identifying our trades. We've already pre-planned our trades, pre-identified our setups. Okay, we like it here off this rejection, or okay, we like it here off this demand, right? And the 9 and 21 don't tell us, okay, yeah, we need to get into this trade. It more so keeps us in the trade. It tells us the momentum isn't slowing down, or it is slowing down, or yeah, the trend has reversed, right? And as you can tell here, going back to the lengths, the 9 is the momentum EMA. So it's telling you the momentum of the trade. Is the momentum slowing down, or is it speeding up to the upside, to the downside, etc.? Or is the trend completely shifting here, right? Because we don't want to be trading against the trend. We want to be trading with the trend. So we predominantly use it on the 5-minute time frame. You can see I'm on the 5-minute time frame right here. And we use them as trim and cut indicators. So the trim would be when price is crossing, or at the 9 EMA. If you didn't take profits, say at your support level that you indicated as a take profit, and you're kind of holding for a bigger move and it's coming back to the 9 EMA, you should, once it gets around that 9 EMA, you should consider taking trims there. It's okay to take a trim there because potentially momentum is slowing down. We're going to take a look into this example right here, and you guys will understand that at a deeper level here in a second. And then the cut is if it crosses the 21, because that signals a complete trend change. And as you can see right now, price is stopped. We are in replay mode. This is today. This is today's price action all the way up until 11:45. 11:50. So we're going to see what price has done after we're done going through this example. Possibly it's reversed back above the 21. You can see how it indicates a trend change, or it's going to stay underneath it, and therefore it indicates no change in trend. So anyway, this is the New York Stock Exchange open. This candle right here at 9:30 a.m. That's when the New York Stock Exchange opens. So obviously that's when a lot of volume comes into the market. So we were expecting the market to kind of push up just a little bit here. Actually, personally, I was expecting it to push up a little bit higher into this 12,190 zone and to get rejections, but it didn't end up doing that. The SPY and Dow made it to their supply zones and started reversing beforehand. But the main point here is that we started building out this flag, and then we had this big red reversal candles. So one thing I want to point out is what's going on right now. Price is crossing below your 9 EMA and your 21 EMA, and then your 9 EMA crosses below your 21, right? So that's indicating that you're having a more momentum to the downside. Just like right over here, you have price crossing above the 9 EMA and the 21 EMA, and then the 9 EMA crossing above the 21. Now you have more momentum to the upside, right? That's an indication that there's more momentum in that direction, either crossing when the price is crossing above it, and then those two are crossing, more indication of momentum to the upside. But because we've been in a downtrend, your risk to reward factor is very little trying to buy up here. It's more waiting for your supply zone to take shorts in the supply zone and take it down. And as you can see, if you had waited for that, your risk to reward ratio would have been much higher, waiting for the resistance here to short back down rather than to take it long right here, right? So you have this big break here indicating, okay, momentum might be shifting, trend might be shifting back down to the downside. And we have a cross of the 9 to 21 EMA, means that momentum is building on itself, because obviously for a shorter time frame EMA to cross over a larger time frame EMA, drastic movements have to be happening on a shorter basis. Does that make sense? Hopefully that makes sense. So as we can see here, as we keep coming down, we build out a little bit of a flag at the day low, which is this 12,050 range here. We build out a little bear flag, and we're actually retesting the 9. So if you had gone short at this level right here and you take it down, but you didn't take profits at the low, which would have been your first take profit for a day trade here, that would have been take profit level 1, take profit level 2 would have been down here, and then take profit level 3 would have been right down underneath here. So this bear flag, and those are all coming from previous levels, by the way. I didn't just pull that out of my ass. So the bear flag right here, you can see we push back up. If you didn't sell at this low of day here, your take profit 1, it comes back to the 9, you should be taking a little bit of your trims, because there is a potential that we double bottom and reverse out of here and then go push up to the supply zone that we were expecting it to hit on the day. Very, very plausible outcome. So you want to be taking trims as it's meeting this 9 EMA here, or take trims on your first take profit as it gets into there, right? Because we want to do that. We don't want to just start to make a day trade into a swing trade. That's never a good idea, right? But as you can see, we hug the 9 EMA, and then we continue to fall. What happens? We fall into our take profit 2. Excuse me. Sorry, I just had my Chipotle. We get into our take profit 2. So we come down into this level, this 11,940 zone here, and this is our take profit 2. If you don't take profits in this level 1, you should have, because this was a big move all the way from 12,125 all down to 11,940. That's a pretty big move. That's about a 200-point move on NASDAQ. You should have taken most of your profits at that time. But if for some reason you didn't, you're looking for a bigger move. Say you have TP3 down here at 11,885 area, and you want to see that 885, right? 11,885. So you're holding the full position. If you don't take your profits here, coming back to the 9 EMA, you might want to consider taking some profits at that level. It might be a very, very smart idea to take profits at that 9 EMA, because it's showing you, this is telling you right here that we're hovering around this 9 EMA. It's telling you that momentum is beginning to slow. But what is it also telling you? It's telling you that there's no reversal in trend, because we haven't broken the 21 yet. There's no break of the EMA, the 21 EMA, so there's no break of the trend. The trend is still down, but the momentum to the downside is slowing. So you want to take advantage of that momentum in your day trades. We are options traders. We're trading volatility at the end of the day. Volatility is momentum. So as momentum speeds up, volatility speeds up, the value of your contracts, the rate at which the value of your contracts is increasing by increases. So you want to take advantage of that. In here, the momentum is slowing down. So what's happening? That's taking value out of your contracts. So you want to make sure that you're looking at stocks that in this manner when utilizing the 9 and 21, because this is what it's telling you. It's telling you momentum's slowing down just a little bit here. You have a retest, a fail, momentum continues. Boom. You have your first take profit. Really good. You secured, maybe you're utilizing the iTrendz 4-to-1. You secured 25% of your total position. And then down here, you secured 50% of your total position. So now you have only 25% left, or maybe, one might call that runners. So you have runners left, but then you have momentum slowing down this area. So you cut your runners in total, right? But it never broke trend. So it didn't break trend. So your trend is still technically down. So that third take profit is in play, depending on how strong this level is. I will tell you this, though, this level is very strong. And I'm looking at my phone here, and we actually have reverse trend. Hopefully you guys can see that the blue line, not the super blue line, but the lighter blue line is the 21. We're actually going to undo the replay mode. Yes, boom. And what happened here? Okay, now let's get rid of this. Shoot, I don't want to do that for you. We're just gonna go over. You can see right here that we have a break of the 21. So what does that mean? that means that the trend is breaking now. The trend is potentially reversing. So if you're still short and the trend's reversing, what are you doing? Because this is going back up to this level right here. This is going back up to 1240, in which you can probably get back into shorts at that point in time and take it back down again. But the point being here is that you had to cross over your 9 EMA. So say you held it through all of this, you took a little bit of trims here, you're looking for that third take profit, it's coming down, you made a double bottom inside of the demand. I don't know if I want to cut this, not just yet, but it's crossing the 9 EMA. So don't go against your rules. The rule is to take the trims at the 9 EMA, take the trim here. It was leading you in the right direction, because very soon after, 10 minutes after, the trend is now reversing, and we can very well see ourselves back up to this 1240, in which I'm actually now looking at this, going to plan on taking a short right inside of here. Boom, for something like this. We come up here, we come back down here, we fuddle around, and we end right there. That will be what my NASDAQ short is going forward. But hopefully this makes a lot of sense. So let's just recap really quickly. The 9 and 21 EMA, the trim and cut EMAs that we use here at iTrendz Trading, that we've been using for about 3 to 4 months now. And we've been developing this process for about 3 to 4 months now and trying to figure out how to put it into words. So the 9 is the momentum EMA. It shows you when momentum is slowing down, slowing momentum right here. It's trading at the 9 EMA. And then the 21 EMA is your trend EMA. It's showing you that trend is potentially reversing right here, right? Trend is reversing from this downside up to here, and then it reverses right back as it crosses underneath. It reverses back to the downside. So again, this is best used on the 5-minute time frame when you're taking day trades. If you want to experiment yourselves with the 15-minute, the 1 hour, the 4 hour, or the daily, go ahead. Let us know how that goes, please, honestly, because we're going to develop this further. And if we see something sustainable where we can actually utilize this on, let's say, a 15-minute or an hourly chart, and we can develop some rules around it where this occurs, this means this, and this occurs, this means that, then we will go for it. But however, so far, we have yet to find anything like that working on the 15-minute or the 1 hour. This is predominantly best used and definitely best used on the 5-minute chart. And so again, we use the 9 EMA as the trim EMA and the 21 as the cut. As you can see here, if you didn't listen to yourself, you're down, you're losing value in your contract here. You didn't listen to what the chart is telling you. You're losing value, you're losing value, you're losing value. So anyway, hopefully this made a lot of sense. The 9 and 21 EMA. If you guys want more examples of this in the future, please put it down in the comments, where we'll always make more. I felt like this was a perfect example. This is a live example too. We did trade this today. Puts on the way down. After we broke down, we took puts, trading it, taking profit at this first level, taking profit at this level as well. Third take profit was down here, but liquidated most of the position down at the major demand level of the day. Anyway, this is going to be a great trade. This is honestly setting up for a very, very nice trade here at a rejection of 1240. So I'm going to be watching that. I will send you guys on your way. Hopefully you guys enjoy this. Please leave a like, a subscription. It really, really helps us out. This has been Zach with iTrendz, and I'll see you in the next video.